is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Jay Powell reiterates the need for hikes, but holds off criticizing the looser financial conditions. Stocks and futures climb. While President Biden vows the U.S. will pay its bills on time as he calls on Congress to raise the debt ceiling in his State of the Union address. Plus, sources say Credit Suisse will pay some of its junior and mid-level banker bonuses in installments as part of its broad overhaul of operations. Now, first of all, let's look at the markets. For the moment, we're seeing gains across the board. Now, European stocks are actually gaining, buoyed by some pretty positive earnings. And this follows a late rally in U.S. shares in a pretty volatile session after Jay Powell passed up on opportunities to tamp down investor optimism. Now, Powell's sober comments really echoing those made from some of the FOMC officials last week, and that's really soothing traders who are expecting the Fed chief to push back on the loosening of financial conditions. So we'll have plenty more on that. In terms of earnings, we have a couple of earnings that we need to keep an eye on. We had Fontobel, bit of concern about outflows there, but then we have some of the better news stories out there. If you look at the 20 industries that make up the Group 600, all of them are on a rise, and you can't see that much of a difference between a CAC 40 or a FTSE 100. Now, President Joe Biden has vowed not to let the U.S. default on its debt. In his State of the Union address, the American leader urged Republicans to find common ground on the issue. Bloomberg's Jennifer Zabazaja now joins us. So, Jen, great to speak to you. I mean, it was quite riveting. It was quite exciting, I guess more than usual. Talk us about the highlights.
Yeah, Fran, I mean, I think what was notable was President Biden really sort of stepping into this role of president 2 years in and really going after a lot of his own economic wins. He spent a majority of his speech touting his own economic agenda, his wins over the past 2 years. He noted some 300 bipartisan bills that he has passed, but also talked a lot about the kitchen table issues that a lot of the middle class in America care about. So things like Medicare, things like gas prices, things like food prices, and specifically, talking about some of his own proposals for the economy when it comes to things like raising a tax on stock buybacks, a millionaire tax, and also what he called the reported record profits from the oil and gas industry. So really trying to evoke the sense that he is looking out for the middle class. Yeah. He said the middle class wins. When we all win, the middle class wins. So really that was the message that he was going for.
Yeah, and he was rallying the troops, right? It was kind of like about getting consensus and this unity plea. Will it work?
Yeah, I mean, he was heckled a good amount of times from Marjorie Taylor Greene. But you know what? He took up that opportunity to really go against some of these colleagues, but also calling for more unity, as you mentioned, calling for opportunities to work together with House Speaker Kevin McCarthy on things like taxes, on things like social media, big tech, on advertising, on things like tickets. Of course, we know the Ticketmaster saga that had happened. And so, he really made it a point to suggest that, he is willing to sit at the table with his opponents, but also those who are willing to be there with him and wanting to see the country sort of rise up from a lot of the hardships that the country has seen, in particular when it comes to police reform, violence, abortion, and other issues like that.
Jen, what can you tell us about the Chinese balloon? So this really has been dominating the headlines.
Right.
And then we thought that the two countries maybe would speak on the phone about it.
Right. And we thought that President Biden was going to speak a little bit more about it. He touched on it, specifically saying that this happened a few days ago and that if and when the U.S. is threatened, as he called it, the U.S. will respond, which is what he said. But most notably, what we heard from U.S. National Security Council spokesperson John Kirby about this balloon incident, this alleged spy balloon, is that the remnants have been recovered and there's no plans to return this to China. And as you mentioned, this call that was supposed to happen, U.S. officials say that China has declined an offer to talk about this call. So, of course, this is not something that's going to go away anytime soon. The president noting that competition with China is stiffer than ever, and it's going to continue going forward.
I mean, I don't know whether we're already in an election cycle, but it feels like it. It's China going to play a dominant role? And so does, the Biden handling of this also impact on 2024?
Right. I mean, I think a lot of people are calling this sort of his pre-election, pre-2024 speech, especially considering how energized he was about some of these issues. And really, when you think about some of the key themes that he talked about, especially when it comes to China, talking about threats to democracy, saying that over the past 2 years, and he talked about the Russia-Ukraine war in particular, that democracies win over autocracies. And so this message, surprisingly, was a winner inside of the chamber. And so I think he's going to continue using that message and talking about this, even when it comes to jobs. He talked about jobs originating in America. Of course, we know the CHIPS Act that he has pushed for, semiconductors originating in America. And so today we're supposed to see him in Wisconsin. He's going to continue talking about some of these jobs. His administration is going to be on the road. So it's really going to be indicative of what they're going to be looking for going forward.
Jen, thank you so much, as always. Jennifer Zabazaja there with the very latest on the State of the Union address. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Turkey has declared a 3-month state of emergency in areas hit by 2 massive earthquakes, giving the government more leeway in rescue and reconstruction efforts. Emergency teams are racing to save people who may still be trapped after Monday's earthquakes. The number of people confirmed killed across Turkey and neighbouring Syria is now approaching 8,000. France has adopted a law to accelerate the development of renewable energy, though some critics say it will actually slow onshore wind and solar projects. Parliament passed the measure to reduce France's dependence on fossil fuels. Unions, meanwhile, held a 3rd national day of strikes against raising the retirement age. The government says about 750,000 did take part. Now that's down from more than 1.25 million the last time. The Pentagon says China refused a call from the US to discuss a suspected spy balloon, which was shot down over the weekend. A Defense Department spokesman says talks with China's defense minister were being sought. The US says the balloon was carrying out surveillance, while China maintains it was a weather monitoring device that did blow off course. And basketball star LeBron James has overtaken Kareem Abdul-Jabbar as NBA's all-time leading scorer. The LA Lakers broke the record, which has stood for nearly 40 years, with a shot against the Oklahoma City Thunder. Tickets for the game were being offered for almost $80,000 each on the resale site StubHub. Global news powered by more than 2,700 journalists and analysts over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine, despite him breaking the record, the LA Lakers still managed to lose that game.
Yeah, it is pretty incredible. Now, let's stay with football, yeah, because we're just getting some breaking news out of Manchester United, which we probably need to bring to our viewers. Manchester United shares, I don't know if we have the share price, are up some 12% in U.S. pre-market trading. This is after the Daily Mail broke a story that some Qatari investors will bid for Manchester United within days. The Daily Mail reporting that they are pretty confident of blowing competitors out of the water. Now, I would say 2 things. First of all, look at Man U, gaining some 13%. They had a pretty large presence in Davos. We also caught up with Avi Glazer, of course, the owner. He would not really be drawn into whether it was 100% for sale. He kept on repeating that, they had options. We also caught up with the Qatar Investment Authority in Davos, and they said, look, if you look at football, it's something that could represent an opportunity. For me, it's unclear now whether it's high-wealth individuals based in Qatar that would make a private bid or whether it would be through the Qatari Investment Authority. On the back of whatever it is, on the back of that Daily Mail report, Man U pre-market 13% higher. Now, coming up, Powell signals more hikes ahead as he says disinflation has barely begun. We delve into the market reaction next, and this is Bloomberg. Now, here in the UK, Rishi Sunak's mini cabinet reshuffle has left Conservative MPs unconvinced it will do enough to reset his premiership. So we round up the full UK news. I would say, look, there are three news that we really need to keep on top of. First of all, it is, of course, a cabinet reshuffle. It sees Kailey Badenoch, Foreign Secretary, now becoming the Business Secretary. But two other big stories today. First of all, the Ukrainian President, Volodymyr Zelensky, is visiting the UK today to meet with Rishi Sunak. And this is extremely, of course, important to see whether this will lead also to more arms and things like that. And then the third big story is, of course, Manchester United. The Daily Mail breaking the story that the Qataris, unclear whether it's a sovereign wealth fund or a group of wealthy individuals, will make a bid for Manchester United. On the back of it, pre-market Manu, or United, as the fans keep on telling me I should call it, gaining 12%. But let's get back to the cabinet reshuffle. With us, Bloomberg's Leanne Gerrans. Hi, Leanne. So what does a cabinet reshuffle actually tell us about Sunak's leadership?
Hi, Francine. So if I have a look, and if we look at this cabinet reshuffle that did happen yesterday, it just seems to appear more procedural than it does seem to be politically punchy at all. And it is left MPs in the Conservative Party a little bit puzzled that this is really going to reset the Prime Minister, Rishi Sunak's premiership. So yesterday we did see him really break up these big four government departments into three separate departments. This seemed to be a strategic move by the Prime Minister, Rishi Sunak, because he does really want to concentrate on energy security and also science here in the country. So we did see him break up that sprawling government department of business, energy and industrial strategy. And this, Francine, has been criticised by government officials as being ineffective.
Yeah, Leanne, we'll see exactly where this ends up too. But if you speak to investors, they do find it a little bit underwhelming. Thanks so much. Our Leanne Gerrans there with the very latest on the UK cabinet reshuffle. Now, Joe Easton from our equities team is also here looking at some of the UK stocks that he's keeping an eye on. What do you have, Joe?
That's right, Fran. So finally, we've got a bit of positive news over in the home builder space, with Barratt Developments reporting a bit of an uptake in their private sales in January, according to the firm in a statement today. This stock obviously has been weighed down by those mortgage worries, with the interest rates potentially spurring a downtick in demand. That stock, though, up around 2%, following some easing concerns around sales. I'm also looking at Smurfit Kappa. Believe it or not, this has very little to do with Smurfs. It is actually a box company based in Ireland, but also listed in London. One of the best ways to judge the strength of an economy is how many boxes we're selling, given the online retail exposure there. That stock, though, down today, underwhelming according to analysts. They're also worried about a bit of an uptick in the energy prices for the company. And, as I mentioned, demand for boxes coming down as the recession takes hold. I also want to revisit BP. It's been a remarkable 2 days for that stock, surging 8% yesterday and up around another 3% as well today. They had that big buyback news yesterday and also increasing that dividend. Analysts at Barclays today giving BP a 1,000 pence price target, meaning it could almost double from where it is now. That's pushing up the FTSE 100. All of the gains that we saw yesterday in the FTSE were pretty much coming from BP, also lifted Shell. More scrutiny on that company, given all the money they're returning to shareholders and potentially a bit of a lesser focus on renewables. But BP having their best 2-day gain in around 2 years today, Fran.
Yeah, thank you so much, Joe Easton. I also need to correct myself, actually, because Kailey Badenoch was Secretary of State for International Trade, so I think I misspoke. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. We look at UK businesses, we look at politics, and, of course, we look at the cost of living crisis. Coming up, Jay Powell signals more hikes ahead as he says disinflation has barely begun. We delve into the market action and reaction next. This is Bloomberg.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Fed Chair Jay Powell says the central bank may have to hike more than what's priced in if the U.S. labor market actually remains strong. Now, Powell was speaking to Bloomberg in his first speech since the latest FOMC decision.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Well, we're now joined by Blackrock's global chief investment strategist, Kailey Leinz. Thank you so much for joining us. I have like a million questions on earnings, but maybe let's start with central banks. Yeah. Is Jay Powell just always a little bit more hawkish to make sure that the market gets it right, or is he really more hawkish?
Well, if you look at market reaction yesterday in response to his speech, we really had a bit of a whipsaw action. It rallied and then it fell and it rallied into the close. It shows to me that there is a bit of everything in his speech that markets can speak to and react to. But if you look at kind of the last 10 days after the Fed meeting, it would appear that the Fed and central banks more broadly may have entered a more nuanced stage of inflation fighting. Previously, it was inflation fighting at all costs, and now we're talking about quite a bit more nuanced. If you look at the Fed and Jay Powell, somewhat hesitant to push back against the financial conditions.
Wait, what does that mean for markets? So is there a bigger chance that they get it wrong because of the nuance?
Well, if you look at market price action so far this year, it's priced for perfection, right? It's priced, we're not talking about soft landing versus hard landing. We're talking about landing versus takeoff, and markets are priced for takeoff. So we're not saying that that scenario is not possible, but a lot of things will have to go right for that to happen. And actually risks are skewed to the downside at this juncture given pricing. And then what then happens depends on Fed's reaction mechanism, how determined they are to fight inflation at this point, and also depends on inflation. If you look at core service ex shelter, we're still running at 4.7% in the US labor market very, very tight. Wage inflation, we're talking about 4-5%. All of that points to we're not on track to settle at 2% for inflation. Even Jay Powell yesterday, he said that this inflation will not be painless.
Yeah, and we also had, for example, a Goldman call, which I think is along the lines that you were thinking about, oil at about $100. So are we going to import a lot of inflation with the China reopening?
The Chinese economy reopening certainly adds to the global inflationary dynamics. In fact, in our assessment, if the Chinese economy didn't open as fast as it did, as it seems to be doing right now, actually oil price would have fallen a lot more than what we have seen so far. And now you talked about kind of oil price inflationary pressure. What we have seen so far in terms of inflation decrease year to date has been driven by goods, has been driven by energy prices, but it can only go for so long that these factors drive inflation down. At some point, it will be all about service inflation, and we think that service inflation, core service inflation is going to be persistent, and we're on track to settle at 3% rather than 2%.
Wait, talk to me a little bit about the earnings. So we have a lot of earnings. It seems to, margins and cost cutting is still where the companies that do best are doing. Is that going to change anytime soon to accommodate for more growth?
What is really interesting is that earnings are certainly so important, but it seems to be playing second fiddle in terms of influencing market reaction than central bank response mechanism. So we're looking at how some companies that missed their earnings were outperforming companies that actually beat their earnings early on in this earnings reporting season. Currently, there are margin pressure, margin coming under pressure, signs of that coming through. If you look at sales growth, actually, they are outstripping earnings growth. That is a sign of margin coming under pressure. But markets are not paying attention to that. At some point, we believe that focus will shift to fundamentals and earnings. And currently, markets are still too optimistic in pricing earnings versus our expectation for a mild contraction for U.S. equity markets.
What are you waiting for it to happen in the UK for you to go in? So for the moment, you're still underweight. I don't know whether there's going to be a turning point. The Bank of England last week was a little bit less nervous, and very cautious, but maybe a bit more optimistic.
No, that's right. There is a similar tone as what we picked up from Madame Lagarde, as we picked up from Jay Powell as well, in terms of, maybe we could avoid a recession. I think that broadly speaks to this soft landing narrative getting more priced in by markets so far this year. But the environment facing central banks, the tough trade-offs facing central banks, if you want to bring down inflation, you have to incur a mild recession. That hasn't changed. To quote Jay Powell yesterday, this inflation will not be painless, and I think that applies to the Bank of England as well, and that's also why we are somewhat prudent in terms of UK assets priced also for perfection, which is also why we prefer emerging markets at this juncture.
Wait, do you worry that actually we just don't really know what to do with this tight labor market? We haven't really been in this kind of environment ever.
That's right. I mean, the last time unemployment rate is this low is 1969. So really, we're really talking about really tight labor market. We're not talking about super hot labor market, because labor market is not so much because of economy overheating, but rather because of supply constraint. And that is not going to go away anytime soon, because if you look at the recent years of participation rate decline in the US, is all explainable by aging demographics. That's not just in the US, that's not just in developed markets, that's also globally, including in China. So aging demographics is going to be one of the reasons that inflation will settle at a higher level versus pre-pandemic levels, and that's why we're living with inflation in this environment, and that's why 3 is the new 2.
Wei, thank you so much. Always smart. Wei Blackrock, Global Chief Investment Strategist, joining us this morning. Coming up, we talk earnings and travel trends with the Trivago Chief Executive, Axel Hefer. That's next. This is Bloomberg. Jay Powell reiterates the need for hikes, but holds off criticizing looser financial conditions. Stocks and futures climb. President Biden vows the U.S. will pay its bills on time as he calls on Congress to raise the debt ceiling in his State of the Union address. Plus, sources say Credit Suisse will pay some of its junior and mid-level banker bonuses in installments as part of its broad overhaul of operations. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Trivago has reported earnings per share for the fourth quarter that missed the average analyst estimates. Referral revenue at the online room reservation specialist missed estimates in both the Americas region and in developed Europe. Well, Trivago has also flagged that while city destinations are growing in popularity, particularly in Europe, travelers are trading down hotel star categories. Well, I am delighted to be joined by the Trivago Chief Executive, Axel Hefer. Axel, thank you so much for joining us. So how is the way we're traveling changing?
So how is it changing? I guess it's getting more expensive. Yeah? So we've seen that in 22 already, and that is continuing in 23. And what is happening is what you would expect, that travelers are trying to recover some of those costs by going to cheaper destinations, by going to cheaper places, so trading down on star categories, and also by cutting down the length of their trips.
So what does that mean in terms of what the summer season is looking at? Are people traveling at different times? And how does that change? Is it almost a direct cost of living crisis that you see getting better in maybe 12 months when inflation gets better?
So the way we are looking at it, and of course, I mean, nobody really knows, because it very much depends on the economic outlook and what exactly would happen over the next 12 months. But we do expect that people will continue to travel, and we've seen it really in the pandemic that travel, and I guess we've all experienced it, is really a basic need. You need to get a break from time to time, and that the inflationary pressure that you see on the room nights in particular, that people will partially compensate that by changing their travel patterns, but not to a very radical degree. Yeah? So we're talking about percentage point changes in behavior.
I like your background, Axel. It makes everyone want to dream and go away. Are you seeing Chinese travelers return?
So we don't operate in China, but we operate pretty much everywhere else in Asia. And what we do see is that the travel into China has surged from pretty much all of our Asian platforms. we do also expect hotel prices in the other Asian countries to go up, as there will be more demand coming out of China.
Are people staying more domestically? So overall, if you're UK based, do you do more domestic trips as wages and everything is changing or are a bit uncertain? And what does that mean for where you want to be? How close do you want to be to your customer?
Depends very much by market. I mean, so we've seen in the pandemic a general trend to domestic travel, but that was more driven by the uncertainty that you would experience by going abroad. With the pandemic being over, there is in the UK, there is still some trend to domestic travel, which we think is more driven by the exchange rates and the exchange rate development. Other than that, the patterns have more or less normalized, and people are happy to go abroad again.
When do you see a pickup actually in going abroad again? So if holiday spending at the moment is under pressure, if it's weakening and if you're expecting to weaken for the foreseeable future, what's the trigger for it to get better? How difficult is it to point at that?
To be honest, it's very difficult to predict exactly what will happen from an economical perspective over the next 12 months. Our expectation is that we will see a soft landing in the US and probably slightly more negative outlook in Europe, and with that we expect overall spendings to go up. But if we're talking about a more negative scenario, you could also have a more negative outlook. So it's very difficult to foresee what exactly will happen, and the visibility last year was greater, to be honest.
Axel, give me a sense of, for example, one of the trends that you've identified is that travelers might choose hotels with 2-3 stars, so cheaper options that are still well rated and maybe offer more of a 4-star experience. If this is a trend over 12 months, maybe 24 months, does it actually impact the type of hotels that are also going to be open in the future?
It should if the trend will continue for a very long time period, but I don't think that's realistic. We expect this more to be a temporary trend where people are trying to save in the next, as we said, in the next 12 to 24 months, but will not change their behavior permanently. And once the salary or real salary development has improved, that they will go back to their old preferences.
Yeah, so searches of Dubai, and this is something that, maybe gives us a bit of a glimpse into a specific concern. So searches for Dubai significantly down compared to pre-pandemic. Why do you think that is?
Dubai is one of the top destinations, in particular for the UK market. It's still a very popular destination. I think that what we are seeing right now is driven by the exchange rate. It's just got more expensive. Overall, it is more expensive because everything is more expensive, but also relatively speaking, for a UK traveler, it got more expensive to go to Dubai.
Do you see, as a lot of Europeans are becoming more cost conscious, do you see any of them actually, abandoning vacation and travel completely? And is this something that could happen?
For sure, that will happen for some travelers and some people that they will stop or they will not travel. But generally speaking, we don't really see that, and we don't expect that to happen. The travel is really important and is really a basic. Right?
All right, thank you so much. Yep. Thank you so much, Axel Hefer, the chief executive of Trivago, joining us this morning. Now, Equinor has increased its quarterly dividend after posting higher than expected fourth quarter earnings from strong gas and power sales. Now, the Norwegian energy giant also announced a share buyback of up to $6 billion for 2023. The chief executive officer, Anders Oppedal, spoke to Bloomberg TV.
2022 was a very special year with the energy crisis, and we really stepped up our production. And we've turned every stone we could to really see how we could increase the production. We increased it by 8%, as you mentioned. I think this is at a high, very, very high level. So increase it very much higher than that will be very difficult. But I can tell you we are doing everything we can to make sure that we secure energy to Europe in this energy crisis.
Mark.
Anders, good morning. As kind of you said there, you've managed to increase production to a record level, but to kind of follow on Anna's point, how much of a problem is it to maintain at these levels? I understand you can increase it further, but in terms of security risks, maintenance costs, can you maintain these levels? And I guess as a tangential question related to that, what do you expect to happen to natural gas prices in 2023, given they're down about 25% year to date already? I know they're very volatile. Do you expect increased downside, and will that impact your production?
Well, yeah, we are guiding today on a production increase of 3%. That is also with liquids, of course. So we will do everything we can to kind of keep up the production. Our maintenance schedule will go on as planned, and energy security for Europe is our first priority. So that will continue. Regarding the gas market, I think we see a kind of unprecedented warm winter at the moment. That is keeping Europe more safe in terms of having enough gas for this winter. We also see that the storage fillage will come up to normal levels and the EU levels also next year. But that will depend on a further demand reduction, and also that a huge amount of LNG imports. So I think the LNG prices will really be the price setter for the gas in Europe over the next years.
Okay, so we'll watch the LNG price carefully. Thinking about product away from oil and gas, renewables obviously a big theme within the industry. Where are you setting your ambitions here? Because one analyst over at Sparebank described your ambitions for 12 to 18 gigawatts of renewables by 2030 as looking too optimistic. How do you convince the market, or have you changed those expectations?
Yes. Now, we always believed in a balanced energy transition where we both have to invest in oil and gas and renewables, and we set an ambition of 12 to 16 gigawatts in 2021. We are progressing towards that ambitions. We have 14 gigawatts accessed, and we have built up a portfolio so that we have much more flexibility in our portfolio now to choose the best projects going forward.
Right, and what's the breakdown of the investment then in both of those? Because we spoke to BP yesterday, they were very clear to describe 50% investment in oil and gas, 50% investment in renewables, doing both, it's and not or. What does the breakdown of your investments look like?
The majority of our investments, we guided on $10 to $11 billion in capex for 2023. The majority, it's still oil and gas, around $8.5–9 billion US, and that will be stable over the next years. And we will gradually increase our investments in renewables.
Well, that was Equinor Chief Executive Anders Opedal speaking to us earlier off the back of earnings, shares soaring in the morning on the back of those results. Coming up, Bonus Blues at Credit Suisse will bring you the latest twist on the firm's handling of compensation and how additional measures on new client wealth in Asia sparked a revolt. That's coming up next, and this is Bloomberg.
We've had 2 years that have been absolutely exceptional. And during those 2 years, we saw a lot of customers actually order probably ahead of demand because they really wanted to meet the sales that they could have. As the world became a bit more normal after the pandemic, we've seen some of these demands slow down. We've seen this correction start to unfold already since September, and we expect it to continue here in the first half of the year. And that certainly will trigger a correction in earnings across the markets that we operate in. It creates also a lot of opportunities for us to continue to serve our customers, but it is a much more normal world we're heading back into. This inventory correction has meant a sharp decrease of imported volumes into mainly Europe and North America, and that has triggered this adjustment. This will continue, we expect, for another quarter or two before demand firms up again. What has triggered our guidance is the fact that on the back of this inventory correction, we're also seeing supply side risks as a lot of new tonnage is going to be phased in the second part of the year, which certainly creates some caution and some volatility towards the second part of the year.
Well, that was Vincent Cleric, Maersk CEO, speaking to Bloomberg after earnings. The share price for Maersk, I think, there you go, gaining still in today's trading session, 2.4% higher. Now, sources tell Bloomberg that some of Credit Suisse's junior and mid-level bankers will get their bonuses paid out in installments. The news really adds to tensions at the bank as it seeks to overhaul its operations after a series of scandals and deep losses. Well, joining us now is our Zurich-based finance reporter, Marion Halftofmeyer. So, Marion, good morning. Thank you so much, as always, for joining us. What do we actually know for these bonuses? If you're a junior banker and you say, look, we're going to give you this much in the next quarter, and then you have to wait for July and October, I mean, people are not going to be happy about this.
Francine, people have not been happy for the last 2 years over bonuses at Credit Suisse. It is a big problem, but the bank is grappling with how to compensate their bankers when they are losing a lot of money. They're undergoing a really difficult restructuring, and they are also trying to retain bankers by doing these sort of out-of-cycle retention payments. So the pool and the amount of money they can allocate to the employees across the board is shifting and very difficult to allocate. And so this is what you're seeing coming through with all these different types of ways they're trying to placate different bankers. Of course, for the junior bankers that they want to retain, that's the talent that's going to be coming up in the next couple of years. This doesn't look good.
So, Mary, I mean, meanwhile, and we'll talk a lot about this because you kind of wonder whether there's maybe a third party involved, which is why this seems all of a sudden that they're, thinking about bonuses going forward. We've also had some news that the lenders dialing back some of the stringent anti-money laundering controls in Asia. Why?
So this stems back to a program that they were trying to install more anti-money laundering controls, tighter controls, particularly in their Asia wealth business. It goes back to the 1MDB days, where they had been sort of, flagged by regulators that their compliance was not as up to par as it should be. But that has had sort of a reverse effect where it's been overly stringent, and clients and the bankers themselves are saying this is difficult to get any business done. We can't get any clients in the bank. And in particular, in the context of what's going on right now, they've had massive outflows from clients. And so it's a bit of a difficult way to say, well, try to get more money into the bank, but at the same time, we're going to make it impossible for you to get the money into the bank. So that's why they're dialing that back now. Let's be clear, it doesn't mean that they have erased anti-money laundering controls.
Yeah, really interesting. Thank you so much. Of course, one of our lead reporters actually on Credit Suisse, our finance reporter in Zurich, Marion Halftofmeyer. We'll have plenty more on Credit Suisse, and then we'll also be in Zurich tomorrow when Credit Suisse earnings come out. We're also getting some breaking news out of Adani Enterprises. Now, it's been a wild ride for Adani Enterprises. It was down 20%, and today it's actually gaining as much as 20% after this rally is continuing, really powering ahead. We could or not hear from the Prime Minister of India shortly on Adani. I know he is meant to speak to a lot of, Parliament, basically. So we are expecting him to maybe say something on Adani because of the closeness he has with the founder of Adani. Hedge funds and distressed debt specialists have really scooped up bonds related to Adani's business empire, I think in the last 2 days or so. And that was a potential sign of encouragement for the group as it really tries to shore up confidence in the wake of this scathing short seller report. On the back of that, so you can see over the 20-day period, it's still down 40%. But in today's trading session, it's gaining 20%. So let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A number of hedge funds and distressed debt specialists have scooped up bonds related to Gautam Adani's business empire in a potential positive sign for the group. Oak Tree Capital Management, one of the world's largest opportunistic debt firms, is said to be among those buying paper in the recent weeks. Now, Jerome Powell is sticking to his message that interest rates need to keep rising to quash inflation. Speaking to David Rubenstein at the Economic Club of Washington, the Fed chair says borrowing costs may reach a higher peak than the market anticipated. Powell says the U.S. labor market remains extraordinarily tight, warning the battle against inflation won't be quick or easy. Total Energies is raising its dividend and will buy back another $2 billion of shares after reporting record profits for 2022. Adjusted net income at the French company was just under $7.6 billion in the fourth quarter. That that was in line with expectations as oil and gas giants are hit with windfall taxes in many countries. Total says its global tax bill more than doubled to $33 billion last year. And Zoom shares jumped on the news. It's cutting 1,300 jobs as it looks to restructure, faced with a slower post-pandemic growth. CEO Eric Yuan says headcount tripled in 2 years during COVID. The cuts amount to 15% of Zoom's workforce. In a blog post, Yuan calls himself accountable and says he will reduce his own pay and forgo his bonus. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, we'll have plenty more, of course, on Turkey declaring a 3-month state of emergency in areas struck by 2 massive earthquakes, with President Erdogan set to visit affected areas. We'll bring you the latest. This is Bloomberg. Now, Turkey has declared a 3-month state of emergency in areas hit by 2 massive earthquakes. It gives government officials greater power in rescue and reconstruction efforts. Now, the number of people confirmed killed across Turkey and neighboring Syria is now approaching 8,000. We're joined by our Turkey bureau chief, Onur Ant. Onur, I have to say the pictures are absolutely horrific coming out of Turkey. What's the latest on the ground in Turkey and Syria?
Well, President Erdogan is going to be at the disaster zone for the first time since 2 earthquakes struck Turkey's southeast. As you said, the death count in Turkey alone is now above 7,000, and more than 1,000 are confirmed dead on the Syrian side of the border. But many, many more are trapped, at least on the Turkish side of the border. We estimate, well, authorities estimate that the number of buildings that collapsed is about 11,000 people. Rescue operations are underway despite freezing temperatures, with teams from both Turkey and dozens of other countries are at the scene. And soldiers, thousands of them, have been mobilized overnight to provide both security in the affected areas and help with rescue operations.
Yeah, and of course we're seeing the human cost. We're seeing also, stories of resilience with, some of the white helmets that have been able to save people and children through the rubble. Do we have a sense of the economic impact from this disaster yet?
It's difficult to have a definitive figure on the economic impact, of course, but according to a preliminary analysis by Bloomberg Economics, focusing on a part of the affected area, the cost of reconstruction can go as high as 5.5%, whereas 5.5% of GDP, whereas some economists also point out the fact that in such reconstruction efforts, because buildings that collapse don't really deduct from GDP, there's usually some rebound in GDP, economic activity as well, although with a delay. In addition, we see the banking sector's exposure to loans in the area is about $30 billion. And also, quakes triggered a rout in Turkish stocks market, and Borsa Istanbul today announced that all trading on the main stock exchange was suspended until further notice.
Thank you, Onur. Of course, Onur Ant, our bureau chief in Turkey. We'll have plenty more from Onur and the team on the ground throughout the day and in the next days and weeks as we continue watching some of the, well, first of all, the rubble, some of the saving, hopefully, of people that are still under there, and then the reconstruction. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz are in New York. Anna Edwards is here in London, and this is Bloomberg.
We're not going to be moved into being threatened to default on the debt if we don't respond. If we could work together the last Congress, there's no reason we can't work together and find consensus on important things in this Congress as well. I stand here tonight after we've created, with the help of many people in this room, 12 million new jobs. More jobs created in 2 years than any president's created in 4 years. We have more to do. But here at home, inflation is coming down. Make no mistake about it. As we made clear last week, if China threatens our sovereignty, we will act to protect our country, and we did.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. President Biden baits Republicans and taunts China's Xi Jinping. We'll look at the president's State of the Union address. A warning from Fed Chair Jerome Powell. He says interest rates need to keep rising if the central bank is going to quash inflation. And SocGen misses its own payout promise. The French bank fell short of a pledge to pay half of its profit to shareholders. Meanwhile, sources say Credit Suisse will pay some of its bankers' bonuses in installments as part of its broad overhaul of operations. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kailey Leinz in New York. Matt Miller is off today. And Kailey, we have the words of President Biden, of Chair Powell, all of that being digested by markets. Here in Europe, the focus very much on earnings.
Yeah, there's definitely a lot for the different markets to pay attention to, and specifically President Biden's comments on China was something Asian traders were definitely taking note of. I would note it was a pretty mixed session in Asia overnight. You had stocks just fractionally lower in China and in Hong Kong, but you had big gains in markets like South Korea. So that led the MSCI Asia Pacific Index as a whole up by about 0.6%, with the Kospi higher by about 1.3%. On an individual stock basis, though, we have to keep an eye on Adani Group because the rebound is continuing across most of the stocks tied to that conglomerate. The flagship Adani Enterprises up 23% today after a gain of near 15% yesterday, which was the best day for the stock since 2020. It looks like we will top that today. So you're starting to see a recovery taking shape as the company is looking to address leverage concerns, repaying some of its debt. That seems to be going at least a little way towards soothing the concerns of investors we have seen come to the surface in the wake of the Hindenburg report over the last several weeks. And then in foreign exchange, I would just point out that the yen once again strengthening against the U.S. dollar after a 1.2% gain yesterday. We're stronger by another 0.25% or so. Dollar yen trading at 130.76. Meanwhile, here in the U.S., as Anna alluded to, it really was all about the comments from Chairman Powell yesterday, which frankly weren't all that different from what we heard in the press conference after the Fed decision last week. Not too much changed, even in the wake of that strong jobs report from last Friday. So that actually led a rally in equities yesterday. We snapped a two-day losing streak, but this morning it doesn't seem to be holding, with futures lower by about 0.25% on S&P 500 E-minis. In the bond market, we are seeing Treasury yields moving a little bit lower, down about 2 basis points on the 10-year to 3.64. But remember, after the Fed decision, we were down at 3.39 or so. So it still has been a big move higher over the last 4 days or so. And we've also seen a big move higher in the commodity complex, specifically crude. WTI at more than 4% yesterday. We are adding to that today, up another 1.4% to 78.21. Bitcoin, meanwhile, Anna, literally flat, just north of 23,000. But of course, we have a special Wednesday edition of Bloomberg Crypto coming up at 1 p.m. Eastern.
Absolutely, something to tune in for on the crypto space. So, Kailey, here in Europe, we are focused on the earnings story and with catch-up with what happened on Wall Street. Kailey nicely explaining there what happened post those comments from Jerome Powell, not really changing his message post-jobs, and that was enough for the markets to rally stateside, and that's been filtering through into the European session today. So, European equity markets lifted by some buoyant earnings and indeed by playing catch-up. Elsewhere, I just want to draw your attention to yet again another a day where we're following all of the story coming out of Turkey that we just saw on the map there. It was very much in red, but that was because we'd seen a lot of selling on that market. Trading in Turkey on the Istanbul exchange now closed, actually. They've suspended trading there as they are still very much in the depths of that rescue mission in Turkey. President Erdogan making plans to visit the earthquake site. This is back to the markets then. This is what we have on European markets, up by 0.9%. As I say, lifted by some of those earnings stories. This is the German 10-year yield in here for you. We've got the euro in focus, 107.53 on the back of what has been actually quite a weak story for the dollar, which is interesting in itself. Dollar weakness kind of in keeping with the risk-on tone that we're seeing here in Europe, not really in keeping with the risk-off futures picture, which we see on US stocks. And Brent crude at 84.65. We've actually seen quite a substantial move higher in oil prices in recent days, overshadowed by other news perhaps, but certainly that's been something that we are watching. Kailey?
All right, Anna, well, let's turn back to the story here in the United States, where President Biden used his State of the Union address to lay a trap, and House Republicans walked into it.
One of them, Representative Marjorie Taylor Greene, began heckling the president when he said that some Republicans supported sunsetting Social Security and Medicare.
Instead of making the wealthy pay their fair share, some Republicans want Medicare and Social Security to sunset. I'm not saying it's a majority. Let me give you, anybody who doubts it, contact my office. I'll give you a copy. I'll give you a copy of the proposal. That means Congress doesn't vote. Well, I'm glad to see you. And I tell you, I enjoy conversion.
For those listening on radio, you can see Marjorie Taylor Greene mouthing the word liar multiple times. Jack Fitzpatrick of Bloomberg Government joins us now in D.C. for more. So, Jack, was it as much about what the president said last night or the response he elicited from the other side of the aisle?
Yeah, the mid-speech debate was really the most important part of it. For what it's worth, he was pretty clearly referring to the plan put out a little while back by Rick Scott, maybe the most uncomfortable person in the room in that moment, who had put out a plan to sunset laws after 5 years, no exceptions, including for Social Security and Medicare. And there are a number of other proposals tied to the debt limit debate that could have gotten them into a discussion about the solvency of Medicare and Social Security. So definitely the action by the president to slam the door closed on any discussions on entitlement solvency as it relates to that debt limit debate, and getting Republicans to cheer for it effectively. It wasn't just Marjorie Taylor Greene. It was a lot of Republicans jeering that statement and then him getting them to vocally agree that they were absolutely off the table. Usually you don't see real-time negotiation on a debt limit measure in the middle of a State of the Union speech, but that was definitely the most notable part of this one.
Yeah, really interesting then, and a sort of a sense that this is what we can expect more of, perhaps, Jack, as we get towards the deadlines around the debt ceiling. In terms of what was agreed upon or where there was any evidence of agreements between both sides of the House, there were a few items on that list, weren't there? But some on foreign policy elicited some bipartisan agreement, notably on China.
Yes, on China, mentions of competition with China. That is one area where there's quite a bit of bipartisan interest. There still is at this point also bipartisan support, especially if you look at sort of Republican leadership figures when it comes to Ukraine. The presence of the ambassador from Ukraine at the speech, definitely a bipartisan moment, despite any potential qualms with some figures in the House Republican Conference. So some bipartisan moments there. And President Biden has, the last couple times in the State of the Union, made a point of having a list of sort of lower hanging fruit policy measures that they all really could agree on: support for the National Cancer Institute, opioids. There was some debate over border security as it relates to fentanyl coming across the border, but trying to stop that. There were a series of policy measures and some previous accomplishments, including the infrastructure bill, and again, as it relates to China, the increased production of semiconductor chips. So a list of accomplishments that had bipartisan support, some goals that they absolutely could accomplish on the cancer initiative, for example, that has bipartisan support. Really a good bulk of the speech was along those lines, with a few notable exceptions.
All right, Jack Fitzpatrick up early for us in Washington after a late night post State of the Union. We really appreciate it. Thank you so much. And we're going to have more on Biden's address later on this hour. Greg Valliere, AGF Investments Chief U.S. Policy Strategist, will be joining us for his take. Meanwhile, let's turn to monetary policy. Fed Chairman Jerome Powell is sticking to his message that interest rates need to keep rising to put down inflation. At an event in Washington, Powell floated the idea that rates may reach a higher peak than traders and policymakers anticipate.
The labor market report for January, it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. If we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in.
Joining us now is Bloomberg Markets Live editor Eddie van der Walt. So, Eddie, is the market hearing what it wants to hear from Powell, which is the same message that it already heard last week?
Yeah, it's pretty hard to see how the market took a dovish spin out of that. I mean, a lot of people are hanging this on the fact that Powell didn't say that financial conditions are loosening and therefore he's not pushing back. But he said that the labor market is hot. He said that inflation, might come in high, and that might mean that they would have to push rates higher. It is an overall hawkish message. The market seems to be saying, well, he didn't say Simon says, and therefore we're going to treat this as a dovish message. And that's absolutely just not the case. And I do think that sets us up for a little bit of volatility going further down the road.
Yeah, Eddie, on that subject, so the market's dovish view was tested last Friday by that jobs report. Could it be tested once again then by the CPI print we get on December 14th?
I think so. I think the Valentine's... I absolutely can't mention February 14th without mentioning Valentine's Day. And I do think there is a risk that it comes in really hot. I don't think this is going to be a love letter to the market. I think this is well, whether or not this one comes in hot or the next one comes in hot, I think there is a risk that at some point we get that out-of-line surprise and everybody's position dovish at the moment, and therefore that we get a significant shock to the markets as we go into any negative reading.
OK, a lot to watch then on the data. Thanks very much. Bloomberg Market Live's Eddie van der Welt with the latest on the Fed here in studio. Now, turning to banking news, France's Société Générale fell short of a pledge to pay out half of its profit to shareholders. That's despite a bigger-than-expected profit from fixed income trading. And over in Zurich, Credit Suisse is adding to turmoil in how the firm handles employee compensation. Bloomberg's learned that the Swiss lender will pay bonuses in instalments to some of its junior and mid-level bankers. For more on Credit Suisse, we're joined now by Bloomberg finance reporter Marion Halftermeyer. Marion, what do we know then about these bonuses? Another day, another story about the way that Credit Suisse is dealing with its staff, remunerating its staff.
Yes, so what we've seen here is that Credit Suisse has changed the way they're going to be compensating bankers, and we've had a couple of different parts to this. So on the one hand, there's been delays in compensation conversations that were due to happen this week, and let's keep in mind that most bankers are getting their bonuses at the end of this month. And then on the other hand, we've seen them say, well, we're going to pay certain bankers in installments over the next couple of quarters, and that's not usual. So they've had to have some discussions around how they allocate bonuses due to the fact that they're losing a lot of money and they are trying to retain people. Now, part of the changes might have to do with the fact that they are carving out part of the investment bank into this new entity, and we're not quite sure what that will look like, and therefore that impacts how those bankers will be compensated.
Meanwhile, we've also had news today, Marion, that the lender is dialing back some stringent anti-money laundering controls in Asia. Why?
Yeah, so this one is a little bit different. Basically, it dates back to some compliance issues they had a few years back. Regulators had told them, look, compliance is not up to par. You need to have more anti-money laundering procedures in place. And so the bank sort of overstepped. And as a result of that, clients and bankers have complained, it's too hard to get through these measures to get to do business with you. And that put into the context of the fact that a lot of clients are fleeing the bank makes it kind of a dual conundrum of we want clients to come to us, but we're making it difficult for you to come to us.
Interesting. Bloomberg's Marion Halftermeyer in Zurich, thank you so much for your reporting. Now let's take a look at some other company and individual stock stories we are watching in pre-market trading here in the U.S. And I actually have to begin with Manchester United. It is surging the better part of 14% in the early trade after the Daily Mail reported that Qatari investors are looking to make an offer for the football club in the coming days. Reportedly, those are separate individual investors who want a full takeover, not just a stake. So that is lifting that stock significantly higher in early hours. Another stock that is significantly higher as well, and this is an earnings story, is Enphase. It's a solar equipment manufacturer, gave a better than expected revenue forecast for the current period, so that stock is up about 10%. And then finally, a less happy story, at least if you're an employee of eBay, is that the company announced it is going to be cutting about 500 jobs or 4% of its workforce as it contends with a sales slowdown. It isn't necessarily seeing a big reward for that in pre-market trading, as we have seen in some instances of these job cuts announcements. Right now, eBay is only up by less than 0.1%, Anna.
OK, lots to watch then pre-market. Coming up on the programme, we'll talk to Gurpreet Gill, Goldman Sachs asset management macro strategist for fixed income. What is she looking ahead to when it comes to the inflation data out of the United States? And what does she make of Chair Powell's comments yesterday? We'll also talk about European banking. We'll be joined by the ECB Supervisory Board Chair, Andrea Enria, who'll be with us to talk about the strengths and weaknesses of bank balance sheets here in Europe. Where does he need to focus his attention? Plus, seeking a supply chain overhaul, we spoke with the Maersk CEO about changes that they're seeing in the industry.
What we're seeing at this stage is a significant inventory adjustment. So we've had 2 years that have been absolutely exceptional. As the world became a bit more normal after the pandemic, we've seen some of these demands slow down. We've seen this correction start to unfold already since September, and we expect it to continue here in the first half of the year. And that certainly will trigger a correction in earnings across the markets that we operate in.
This process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
Fed Chair Jerome Powell there speaking to David Rubenstein at the Economic Club of Washington. Joining us now, Gurpreet Gill, Goldman Sachs asset management macro strategist for fixed income. Gurpreet, we certainly saw a risk-on response at some stages of the US trading day, and by the end of the day, we'd seen stocks go substantially higher, as if the market took a fairly dovish interpretation away from Powell. Do you think that was right? Do you think the market took the messages it wanted to hear, or the ones it should have heard?
Hi, Anna. First of all, thanks for having me on the show. I would say that the market response is somewhat confusing at the moment. I guess they were responding to the fact that there was no added hawkishness in response to the strong labour market report. Powell largely stuck to the communication of last week's post-meeting press conference. He's acknowledging that disinflation is underway, but he's also saying that there is much more work to be done. And as it stands today, we think that the data-dependent Fed, in light of that strong jobs report, would likely deliver 2 more 25 basis points rate hikes in March and in May, but a lot can change between now and then. I think big picture in this regime, where any resilience in labour market or activity data will see the market price out the prospects of rate cuts, but it's really going to take significant upside surprises on inflation for the market to price in a much more aggressive Fed path than they currently have.
Yeah, as we all try to understand what data dependence means in 2023, Gurpreet, it was interesting that one set of very strong job creation data out of the US does not elicit any kind of change of thinking at the Fed. I suppose reminding us that there's a difference between being data dependent and having to pivot on every single data point. We're certainly not in the latter camp. How does that set us up for CPI?
First of all, I'd say that is a good point, that the Fed is not going to be beholden to any one data point. But the big picture, which is more important about the strong jobs data that we're getting, is that it's not being accompanied by a large acceleration in wage growth. In fact, broader measures of wage growth are trending in the right direction. We've come from a high of around 5.5% in early 2022 to around 4.25% if you average across things like the employment cost index and average hourly earnings. And so we're around 2/3 of the way to that 3.5% wage growth level that is estimated to be compatible with 2% inflation. So I would say that is just a positive surprise of this unusual post-pandemic recovery, which is that Fed tightening appears to be tempering wage growth, but is not creating too much weakness in the jobs market. So jobs growth alone is not cause for concern. In terms of next week's CPI, I would say we tend to look at the 4 layers of inflation, so commodities, what's happening with rent, goods and services. Commodities progress has been encouraging. Goods, again, disinflation is underway, but I would caution that there could be upside to auto prices based on what we've seen in measures like the Manheim Index, which is a forward-looking gauge for what happens to prices there. With rent, we continue to see rents on new leases come down, and so we think over time that will extend to existing leases. And then for core services, that's where rebalancing of the labour market is really key. And as we saw from last week's report, progress has been slow.
So, Gurpreet, the idea that inflation may be more persistent, in theory, runs against this narrative that the Fed is going to turn around and start cutting rates in the not-so-distant future. If that is the assumption you are operating under, how appropriately priced are treasuries?
So we would say that we agree with your assessment there that a pivot to a pause is more likely than a pivot to easing. What we've actually seen is market pricing over the past week has converged to that expectation that we held. And so you've seen price cuts be removed from the market, and that is in line with our outlook. So today we still expect 2 rate hikes, like I said, and then a pause into 2024. But I would emphasize that a lot can change between now and the May meeting. We're going to have to see what happens to inflation data, what happens with the next jobs report, but also what the March statement of economic projections for the Fed shows. In particular, does that median dot plot projection evolve?
And when we talk about tightening, it's not just about the Fed hiking either. We also have to consider QT. How should we be thinking about that, Gurpreet? Because that's ongoing. That doesn't necessarily stop when the Fed pauses elevating rates.
Yeah, that's a great point. Look, we have no historical playbook for how the market will adjust to the global QT, not just Fed QT. We also have the ECB looking to start QT from March. And so I think what we learned from the UK episodes last October is that it really depends on existing market conditions. It depends on the interaction with fiscal policy. And so QT in itself is just part of the broader policymaker objective of unwinding ultra-easy policies of the past to a new environment. And so for investors, this new era, in the absence of ever lower interest rates and in the presence of more dispersion, it really just underscores the importance of staying selective and active bond selection when it comes to markets like investment-grade credit or high-yield credit.
All right, Gurpreet Gill of Goldman Sachs Asset Management, thank you so much for your time and insight this morning. We really appreciate it. Now let's also keep you up to date with other news from around the world with the first word. Turkey has begun to deploy thousands of soldiers to areas struck by 2 massive earthquakes. They'll help in rescue and recovery operations. The death toll in Turkey and Syria has now gone over 8,000. Searchers are still pulling survivors out of the rubble. In China, President Xi Jinping is rejecting any need to westernize. He told top officials that the country's successful development shows there is another way to modernize. Xi reemphasized his goals of increased self-reliance and improved social justice. Ukraine's President Volodymyr Zelensky will be in London today to meet with Prime Minister Rishi Sunak. They'll discuss British support for Ukraine's military, including sending equipment to help counter an expected Russian offensive. Sunak will also offer to expand training to include Ukrainian fighter pilots. And the service that became ubiquitous during the pandemic is now adapting to slower growth. Zoom is eliminating 15% of its workers, about 1,300 jobs. The CEO, Eric Yuan, says that the company's headcount tripled in 2 years. He is reducing his salary and will give up his bonus. So, Anna, this is just yet another example of a company that expanded so rapidly over the last several years when it was boom times during the pandemic and now has to adjust to an environment that looks very different. We have seen that all across the tech sector.
Yeah, absolutely. The tech sector certainly comes to mind when we think about that. But also other sectors as well, Kailey. I was talking to the Maersk CEO a little bit earlier on today, the big shipping giants. And of course, we saw those freight rates really reflecting supply chain issues during the pandemic. They've come back down to earth. And we're living in a much more normal world. That was the way that the CEO described the operating environment for a business like Maersk right now. Now, coming up, we'll talk about European banking. We've seen plans to return cash to shareholders, a big focus on balance sheet strength as some of those balance sheets have been tested by credit risks in recent years. We will get to our conversation with the ECB Supervisory Board Chair, Andrea Enria. This is Bloomberg Surveillance Early Edition. Here's what you need to know. President Biden baits Republicans and taunts China's Xi Jinping. We'll look at the president's State of the Union address. A warning from Fed Chair Jerome Powell. He says interest rates need to keep rising if the central bank is going to quash inflation. And Bloomberg's learned that Credit Suisse will pay bonuses in installments to some of its junior and mid-level bankers. The Swiss lender is overhauling operations after a series of scandals and deep losses. I'm Anna Edwards in London with Kailey Leinz in New York. Matt Miller is off today. And Kailey, European stocks then responding to the macro trends on Wall Street yesterday, but also to the robustness of some of the earnings stories here.
Yeah, and I will say, Anna, what happened on Wall Street yesterday doesn't seem like it is getting fresh life this morning, because we did snap a two-day losing streak on U.S. stocks. We ended the day higher, but this morning in the futures session, we are just rolling over. We're right around session lows, actually, when it comes to futures, even though the market seemed yesterday, at least, to take Chairman Powell's messages pretty much the same as it was before the jobs report when he spoke after the Fed decision last Wednesday. Again, though, that sentiment not lasting this morning, with S&P E-minis down by about 0.3%. Not too much movement in the Treasury market. We're down less than 2 basis points on the 10-year Treasury yield to 3.65. So still, we remain about 26 or so basis points higher than we were the day after the Fed decision. So we have to keep that in mind. And also very much higher over the last several days is oil. After a more than 4% gain yesterday on better demand coming out of China, we are seeing that extending today, up another 1.3% on WTI to 78.11 a barrel. Bitcoin essentially flat on the day, but we remain north of $23,000. It feels like this maybe is the new range for the cryptocurrency. As for some individual movers in pre-market trading to keep an eye on, a lot of them are in the solar space after we got better than expected revenue guidance from Enphase, which is a solar equipment manufacturer. It's up about 11%, and taking some other solar stocks along with it in sympathy. Solar Edge is up about 6%, Sunrun higher by nearly 3%. And then, Anna, I know people on your side of the Atlantic will be watching this story very closely as well. Manchester United up about 13% after the Daily Mail reported a group of Qatari investors are looking to make an offer for the football club in the coming days.
Yeah, and that is a sizable move, because we already saw the share price respond to the earlier reports that the club was up for sale. So that is certainly one that we will be continuing to watch then, Kailey, through the day. This is the European equity market space right now. Stocks in Europe up by 0.8%, as I say, playing catch up with Wall Street, but also factoring in some better earnings news. Some mixed earnings news coming through from AP Moller-Maersk, the giant of the seas, the big logistics shipping business. This stock was down in early hours because the company's guidance looked to be much weaker than the market had anticipated. And if you're looking for macro clues, that might be where you focus. But a lot of this has to do with inventory build-up. And so after the market got some time to digest the buyback that the company is announcing, the stock actually managed to gain and is now up by 0.3%. Akzo Nobel, a Dutch paint and coatings business, up by 4.7%. This is the year of margin expansion. Those were the words of the CEO as he put it to us a little bit earlier on in trade. Costs coming down is essentially one of the reasons why that business looks to be doing better. And Adyen, this is another Dutch business in the payment side of things, down by 13.6%. And the focus, Kailey, of course, for the tech sector has all been about retrenchment, about cutting jobs, about pulling back on investment. Well, that's not the message that we got from Adyen. Certainly on the recruitment side, they're pushing ahead with those recruitment plans. And as a result, the stock is a little bit weaker. Now, let's step to the financial services sector more broadly. European banks have been reporting this week, many profiting from the rapid increase in interest rates that we've seen from the ECB. The central bank has hiked by 300 basis points since last July. How will banks fare then in 2023? We're joined by Andrea Enria, chairman of the ECB Supervisory Board. Andrea, very nice to have you with us. Various questions and themes around regulation that we want to get to you. I just want to get your sense, though, of the banking sector in 2023, given that rates have been rising, banks have been benefiting, rates continue, at least in the short term, to be expected to go higher. How do you think that banks are going to perform then in this year ahead?
Good morning. And well, in 2022, European banks had a very good year, honestly, in terms of profitability. As you say, the interest rates increase have been playing very well in their P&L. So it has been very, very positive. We didn't have any materialization of credit risk as we expected from the Russian war of invasion in Ukraine. So all in all, it has been good so far. And the baseline projection for next year is that if we have, a slowdown or even a shallow recession, banks should still see positive impact on their earnings. Of course, there are risks to these baseline projections. There is the possibility that, interest rates go higher and faster than expected, or that there is a recession which is sharper than expected. And that's why we as supervisors, of course, we are asking banks to be prudent at this juncture.
Well, on the subject of prudence, Andrea, we have seen several well-capitalized banks like UniCredit announcing large dividend payouts and share buybacks in recent days. What is your view on that, and do you expect that will meet with ECB approval?
We have, our supervisors have vetted the distribution plans of the European banks, looking at the capital trajectories. That's our point of attention. So we check that in a baseline scenario, but also in a sufficiently conservative adverse scenario, banks would remain above the regulatory yardsticks. And we found that for the largest majority of banks, this was indeed the case. So the banks' distribution plans are sustainable, and then is where we will not raise any objections. We also saw that some banks that were planning very sizable distributions have wisely chosen to spread their buybacks into different tranches, also to look at the possible turns in the macroeconomic environment, which we think has been prudent. But all in all, the distribution plans are sustainable from our perspective.
Okay, and let's talk about capital add-ons as well, because the ECB hit banks like Deutsche Bank, BNP Paribas with add-ons late last year because of concern around leverage loan risk and taking too much of it. How have those banks responded? Have they dialed back? Will you remove those capital add-ons in the coming months?
Our capital add-ons are targeted. Banks know very well what are the issues that we have identified, the weaknesses in their risk appetite frameworks, excessive generation of highly leveraged loans. So they know what they need to do to remedy the issues that we have identified. And as soon as these issues are remedied, the capital add-ons will be removed.
Can I ask you about the possibility of using other additional capital add-ons, Andrea? And I'm thinking here about, in particular, counterparty credit risk. I know that you said just this morning that capital add-ons are possible for this type of risk if banks fail to comply. This perhaps comes back to Archegos and the things we've learned there. Where are you seeing resistance from banks to comply with what you're asking?
To be honest, let's say we issued our recommendations on counterparty credit risk pretty recently. We completed our review in the last part of 2022. So we need to give now some time to the banks to actually follow up to our recommendations and comply with them. And I expect that they will comply. I mean, that's our central expectation. So we expect that there will be no need to apply capital add-on. Of course, if banks, as it has happened in the case of leverage finance, we see for a long period of time that they do not react, and they actually move in the opposite direction. So continue originating high risk exposures and with poor, let's say, risk controls. Well, then that's the moment in which we will need to ask ourselves which type of remediation tools we have in our toolbox.
From a regulatory perspective, Andrea, are you confident that another Archegos could not wreak havoc on the European banking sector once again, or could it still happen?
To be honest with you, I've been surprised that there have not been other cases. We've seen quite a lot of financing moving from the banking sector, from the regulated banking sector to the non-bank financial sector. This was also something to some extent driven by the post-crisis regulatory reforms. And we know that there have been segments of this market in which there has been significant increase in leverage and concentration of exposures. So I would have expected this to happen more. By the way, our recommendation to banks is to keep the guard high, to maintain very strong, risk management frameworks to deal with these type of exposures. We hope that these recommendations that we have done following our review of this specific line of business will help at least sheltering banks from these events if they happen.
Andrea, thank you very much for your time. ECB Supervisory Board Chair Andrea Enria joining us there from Frankfurt. Coming up on the programme, we'll get back to the politics, to President Biden's State of the Union address. We'll be hearing from Greg Valliere, Chief US Policy Strategist at AGF Investments. What stood out to him from the President? This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with Uber CEO Dara Khosrowshahi. That's at 11:30 a.m. New York time, 4:30 p.m. in London. This is Bloomberg.
We've already created, through help, 800,000 good-paying manufacturing jobs, the fastest growth in 40 years. And where is it written? Where is it written that America can't lead the world in manufacturing? And I don't know where that's written. For too many decades, we imported projects and exported jobs. Now, thanks to what you've all done, we're exporting American products and creating American jobs.
That was President Biden touting his economic successes in his State of the Union address last night. In the speech, Biden focused heavily on economic themes, calling for higher taxes on billionaires and tax buybacks, as well as new consumer protections and antitrust efforts. Joining us now to unpack Biden's comments and look ahead is Greg Valliere, AGF Investments Chief U.S. Policy Strategist. So, Greg, good to see you. The president tried very hard to convince the American people that he has done a lot in his 2 years in office. How much is he realistically going to be doing in the next 2 years, considering the Congress he was addressing is divided?
Not a lot, Kailey. I think that he's got most of what he wanted already. I think the next 2 years are going to be dominated by two factors. Number one, all the investigations against him and Hunter and on and on and on. And number two, geopolitics, whether it's Ukraine or China or Iran. I think those two issues will dominate, even though Biden does have a valid case that the economy is in pretty good shape.
Well, and if we are viewing this as a quasi-campaign speech, if indeed he does run in 2024, which we don't know for sure, but we all think, or at least the consensus seems to be that that is going to be his plan, is it so much about casting himself as the right choice or the better alternative, considering we once again last night saw him sparring with the other side of the aisle, Marjorie Taylor Greene standing up and calling him a liar? How much is it going to be about framing him as the alternative as we go forward?
Yeah, he's going to have to hit back hard, in part because he's 80. I mean, he can't do anything about that. But I think his age is a factor. I think people feel that his energy has diminished over the last few years. So he's got to show a lot of activity there. The other thing is to really go after the Republicans and cast them as the villains on a possible debt default. He may have some luck on that.
Yeah, what did we learn yesterday, given the mood in the room and the way that certain messages went down, Greg? How does that inform our thinking about the debt debates that are going to happen between now and the fall?
It's not a really optimistic sign. It's a foreboding sign for the debt battle. You've got Republicans divided. We had the spectacle of Kevin McCarthy trying to shush Marjorie Taylor Greene and other Republicans who were booing and heckling the president, and McCarthy was not real successful at doing that. So in addition to divided Republicans, I think you're going to see the Democrats also not in great shape. Their margins in both houses are minimal.
From a business perspective, there was talk of higher taxes. There was talk of buybacks being in the frame when it comes to the president. But does that tell us anything about where policy goes on those fronts, Greg? Is this what we heard from the president on that front? Is it in any way likely to be delivered?
Well, there's going to be a lot of rhetoric, and Joe Biden can read the polls, and the polls show the public hates the oil companies, big business. The public wants to tax the very wealthy. So Biden knows this, and he's going to go after these issues and go after things like big oil. The problem is he doesn't have the votes, and I think there's a headline risk for big oil and big companies, but there's no legislative risk. The votes aren't there.
That's all kind of on the domestic side. Greg, did we learn anything significant about the stance he is taking in foreign policy with his rhetoric around China in particular post-balloon incident?
Well, everybody in this town, in both parties, has great antipathy toward the Chinese. The way they've handled COVID, the way they treat their dissidents, the way they spy on everybody, their threats to Taiwan. So you're going to have almost a unanimity in Washington against China. The other story that did not get much clarity, to my disappointment, was Ukraine. Is this Congress willing to continue offering aid? The jury's still out on that one.
What do you think about that, though, Greg? Because that is a conversation we were having around the midterms, especially the idea that if Republicans had greater control, it may be more difficult to get aid to Ukraine through. Have you been able to formulate further your thinking around that a month into this new Congress?
I think NATO still is remarkably unified, and there will be tanks from Germany and the U.S. They're not coming right away. They're probably a few months away. So I think there's still a decent amount of aid. However, the House conservatives, this very radical group, does not want to spend a lot more money on Ukraine or actually a lot more money on defense. That's going to be one of Kevin McCarthy's greatest challenges to bring them into the fold.
And finally, on the subject of some of those conservatives or the far right wing of the Republican Party, they also have clung to certain ideas around the Biden family. Hunter Biden's laptop, for example, and launching today, as you alluded to earlier, is that congressional investigation. The Oversight and Accountability Committee is going to be looking into those financial dealings. Is that something that helps or hurts the president or the Republicans to a greater extent, Greg?
It's a really good question. I think it could backfire if the Republicans are viewed as too aggressive. But at the same time, there's going to be a lot there. And virtually every week for the rest of this year, there'll be some blockbuster hearing that's going to go after Joe Biden.
All right, Greg, we have to leave it there. But thank you so much for waking up early for us post State of the Union to give us your thoughts and look forward. Greg Valliere of AGF Investments. Now, coming up, we're going to talk about a different kind of leader, one in the sports world. LeBron James breaks the all-time NBA scoring record. We'll have more of the basketball player's career highlights next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London. Matt Miller is off today. And Anna, we have to talk about the king. In the NBA, Los Angeles Lakers star LeBron James has broken the league's career scoring record. His jump shot against the Oklahoma City Thunder eclipsed the mark of 38,387 points set previously by Kareem Abdul-Jabbar. Joining us now is Bloomberg's Greg Tanner. Before joining Bloomberg, he covered basketball and has interviewed LeBron himself on several occasions. So, Greg, obviously a big deal. Just how big a deal is this?
It's hard to overstate it, honestly. I mean, we've seen in recent months 40-year inflation readings get broken. Now we've seen a near 40-year NBA record get broken. I think a lot of basketball watchers, myself included, if you'd asked me 8 to 10 years ago, will Kareem's record ever be broken up? I honestly probably would have told you no. There's a reason that it stood for nearly 40 years. But the fact that LeBron has done it in his 20th year speaks to his longevity. And actually speaks to the fact he is a scorer. It's almost ironic. He's been known throughout his career as being more of a facilitator, more of an all-round player, less so of a scorer than a Kobe Bryant or a Michael Jordan. And now he's done it. And, you know, a record that's 8 months older than himself has finally been surpassed.
Yeah, quite incredible. Greg, only you could tie this back to financial markets, for which we appreciate your contribution. But let's stick with the game for a moment. A bright spot for LeBron then. But this comes, I understand, at a rough time for him and the Lakers. Tell us more.
It does. It's almost like the game last night was a microcosm of the season. Great moment for LeBron, but they lost to Oklahoma. And it's been a losing season for the Lakers overall. They have a 25-30 record, which puts them at 13th in the Western Conference, out of playoff contention, out of even making the play-in tournament. And with LeBron being 38 years old, his window is only going to last so long for how much greatness he has left. The clock is ticking. Father Time is undefeated against everyone. And the Lakers, need to buck up. They had been hoping to get Kyrie Irving, who last week requested a trade out of the Brooklyn Nets, but he was snapped up the other day by the Dallas Mavericks. So that sort of hope for improving the roster has gone away. And actually, the last thing LeBron tweeted was, maybe it's me. He hasn't even tweeted about setting a record overnight. His last thing was a regret about not getting Kyrie Irving. So, yeah, this is a bright spot, very much in a down season for LeBron and the Lakers at the moment.
Greg, finally, I do want to bring it back to the money because this is Bloomberg after all, and some of these stats are astounding. LeBron James has been paid nearly $11,000 for every point he has scored, if you break it down. He's made something like $420 million over this 20-year career. How does the money in basketball stack up against other sports? Because $420 million is nothing to sneeze at, but when you look at the contracts some of these guys are getting now for a shorter duration, I don't know.
Exactly. Every year, the TV money seems to go up and up and up. Every time they re-up on a deal, and then the following year, the players re-sign their contracts. It's insane. And that $450 million as well, you know, when you're doing the maths and it's $11,000 per minute, that's just his NBA salary as well. You've then got to factor in all his endorsements. I think he signed a $70 million deal or $90 million deal with Nike before he'd even stepped foot on an NBA court at the age of 18. So the money is bonkers. But as you say, Kailey, it keeps going up every year. All the time, primarily the television revenue keeps increasing.
Greg, thank you very much. Bloomberg's Greg Tanner with the latest on that story. And Kailey, you mentioned the earnings, and another financials elements to this story, I suppose, is that tickets for this game were on sale for about $80,000 on sites such as StubHub. I mean, we talk about inflation. That has to be some serious inflation.
Yeah, and we've seen this evidenced well beyond sports with Taylor Swift, for example, and we'll see if the same thing happens with Beyonce, Anna. But on the subject of tickets, I just did a quick Google for the Super Bowl this coming weekend. Price range between $4,000 to start up to $400,000 for a suite at the match between the Philadelphia Eagles and the Kansas City Chiefs. I would love to go to a Super Bowl, but I think that's a little bit out of my range.
Yeah, I mean, you could buy a house for that. Yeah, absolutely. Right, let's leave that story there. That is it for Early Edition. Surveillance is ahead. Tom, John and Lisa, they'll be hearing from New York Fed President Bill Dudley. What did he make of what Powell had to say, the way the markets responded to what Powell had to say yesterday as he was in conversation with David Rubenstein. Lots more still to come then on these markets. This is Bloomberg.